Good morning, everybody, and this is your Dow Jones setups for today. So what a volatile 3 weeks this has been, and yesterday was just more chaos. Bank of Japan raising interest rates unexpectedly, which sent the Asian markets into a tailspin. I think the Nikkei was down close to 6% at one stage last night, and I think it's been hammered properly today again. And earnings coming out, mixed bag of earnings, but more importantly, another attack on tech stocks. And quite simply put, just any stock that is dabbling with AI, which is probably everybody, got hammered just due to the fact that there's a chip shortage or there's potential supply problems around the chipset. Which is impacting the growth of AI and also the added advancement that everybody else needs to make to buy more chips and spend more money on developing AI. But yeah, we shall see. I think it's absolute chaos, I think, and something just tells me that this volatility is the new way of trading. We're not going to have structured trading, because as these institutions bring algorithms and AI into trading, this is what's going to happen. You're going to have people, well, not people, but you're going to have algorithms responding to the slightest bit of noise in the market and driving price in a direction, which is this kind of thing that you're going to see. So we'll have to wait and see, but I strongly suspect this is a situation that is brewing. And us day traders, or let's not call us day traders, but us retail traders are the ones that are going to suffer unless you adapt. So your strategies need to adapt. Probably the market you trade needs to adapt, and we'll wait and see. But you can see if you just zoom out like this, just look back over the last couple of weeks, and these 3 weeks, look how volatile that's been compared to the last couple of weeks. There's structure, there's up structure, there's down structure, there's a range, there's down structure, and you look at it the last couple of weeks, look at this. Anyway, let's just drill down. There's nothing really we can read into the 8 hour at the moment. That is a range. And if we get to the 3 hour, we've had a massive sell-off, and then you can see we've got buyers coming in, going into close. After hours market is not agreeing with that situation at the moment, but you're going to have, that is the level that we're looking at after hours. So I would still be paying attention to that level. Not necessary to buy off or sell off, to be honest. I don't think I want to be doing anything with indexes right now. I'd rather let this just settle down. The one thing that you need to bear in mind is it doesn't matter about what the institutions are doing, because this is basically driven by the institutions, but they need trades in the market in order to execute these things. So in other words, they would have need people that were long with a stop loss below here to add volumes here to the downward push. So what they would start doing is they would start selling, and you probably find a number of algorithms would be watching different institutions, and as soon as they see them selling, they'll sell with. So they try and create volumes together to start driving the market down, and they've got access to tools that none of us do. So, well, you do have access to them, you just can't afford them. So at the end of the day, the retail traders that may have been in here anticipating a long, which is very possible, I was one of them, would jumped in early with trades with stop losses below, and then they would have been waiting for that move to go up. But all that happens with the institution is that they know that you've got your stop losses in. They can see the volume of the stop losses at the bottom, so they can see those trades, and they just drive price down as hard as they can until those stops get triggered, and then this is the result. As the stops get triggered, this is the result. And they keep driving it down, and that's why you see always a strong start to a short sell, and then it starts doing this. So sometimes it does this, and the algorithms and the institutions say, okay, cool, we've made that money. This is a good place to buy, and then they start buying because they can see what trades in the market again. So anyway, you've got to be so careful at the moment, especially when it's this volatile. It doesn't help just jumping in. So I definitely do not want to be jumping in short at this level. Not at all. Definitely don't want to be jumping in long either, because that would be against the rules of the strategy. So we can't be long when we're below the 150 EMA. But if you look at this on the 15, above the 150 EMA for 2 days, in amongst it, then above, and then below quite aggressively. So we could fall a little bit more today, or we could move to the upside. We do have quite a bit of data coming out today. Should be non-farm payrolls today as well. So you'll probably find us just ranging around until the data comes out, and if I'm correct, we'll have a good set of data coming out for non-farm payrolls, and then this is going to spike to the upside. Don't be too surprised that it spikes all the way back to where it was yesterday morning. So yeah, I'm going to stay out of it. I think it's way too volatile, way too much going on with lots of data. It's an ideal week for algorithms to trade. I suppose that's the best way to put it. Anyway, enough mumblings from me. I will catch up with you on Monday morning, and we'll stay out of this. Cheers for now.